The earnings call from last week revealed an unprecedented level of engagement from Elon Musk as he meticulously answered analysts' questions with a deep dive into the details. I don't think I've ever seen him more plugged into the intricacies of the business. He's proven time and again to be an exceptional CEO. He's a problem solver at heart, always identifying the bottlenecks and key challenges, then focusing his efforts squarely on resolving them. His troubleshooting skills are a big part of why Tesla continues to thrive, and I believe he's tackling these issues more effectively than ever before. Right now, one of the most significant developments for Tesla is the refresh of the Model Y, which, by the way, is currently the best-selling car in the world. The demand is staggering, but sales have been somewhat slower lately, which has raised a few eyebrows. I'll share a personal experience. When I went to buy a Model E a few months ago, the sales team at the showroom advised me to hold off, telling me a major refresh was on the horizon. Sure enough, here we are, and the anticipation is justified. The slight slowdown in sales makes perfect sense now, especially with the new model update expected soon. This refresh cycle is not the only thing driving Tesla's long-term strategy. I believe that Tesla's much-anticipated lower-cost car, which is slated for release this year, will unlock access to a whole new market segment, making Tesla cars more affordable for a broader base of consumers. Elon Musk has consistently emphasized the importance of affordability, and this new vehicle could be a game-changer in that regard. In addition to the price reduction, there's the looming potential of full autonomy. Tesla is gearing up to launch its autonomous service, with the official rollout expected in Austin this June. The question isn't just whether they will launch, but how rapidly they will expand this service to other cities. My prediction? Much faster than most expect. When it comes to charging, Tesla is already way ahead of the game. Other automakers have already adopted Tesla's charging standard, and it's clear why. The infrastructure is solid, and there's no reason for competitors to duplicate the costs when government subsidies are already helping to expand the network. The charging ecosystem is set to benefit Tesla, but it will also improve the broader EV market. As we transition from Tesla's developments to a broader look at tech stocks, companies like Palantir and GitLab are becoming beneficiaries of the shifting market dynamics. While hardware and cloud infrastructure are critical, there's an emerging trend in the form of platform as a service, PaaS, which will claim a growing share of the tech stack. Developers are flocking to these services, and it's clear that this trend will continue to gain momentum. Now, let's shift gears back to Tesla and look at their broader innovation. Tesla's growth isn't just about manufacturing better cars. It's about creating a ripple effect in several industries. Seeking Alpha, for example, is an excellent resource for anyone tracking Tesla's innovations, stock price targets, and Musk's latest ambitions. If you haven't already, check the affiliate links in the description to stay updated on the latest in Tesla and Elon Musk's world. Our portfolios are aligned with this forward-looking tech innovation. We're invested in companies like Amazon, which continues to show strong growth, especially in its cloud services. We're particularly bullish after their recent earnings call, which highlighted Amazon's competitive advantage in retail prices, with a reported 14% edge over other online shopping sites. That was a major concern for a while, whether personal agents could disrupt Amazon's retail model. But it seems Amazon is still standing strong. Moving to NVIDIA, it's clear that demand for high-performance chips will continue to surge. The space is heating up, with new players entering the market. Still, NVIDIA remains one of the key players in the race. But there's more competition coming, especially from Amazon's own chip solutions. As large language models, LLMs, grow in popularity, we may see more computing power moving from the cloud to high-end workstations, creating a shift in how companies approach AI. Speaking of AI, the landscape is evolving quickly, as AI training costs fall, down 75% per year, according to recent reports. AI inference costs are plummeting even more, dropping 85 to 95% annually. This drastic reduction in costs is going to turbocharge innovation across industries. The rise of agentic AI, for example, is already revolutionizing coding. AI systems are now able to handle up to 85% of coding tasks autonomously, which is just the tip of the iceberg. Within a few years, AI could be taking over 100% of these tasks, making coders more efficient than ever before. Looking at the bigger picture, there are three headwinds that have historically hindered market growth. First, concentration in the market. Investors have gravitated toward large-cap companies for their perceived safety. Second, interest rates. A shocking 24-fold increase in just over a year has left long-duration assets reeling. Finally, valuations have often been stretched, especially post-COVID, as stocks soared to unsustainable levels. However, I believe that these headwinds are now shifting. The market is broadening, interest rates are stabilizing, and valuations are adjusting, which should provide tailwinds for growth moving forward. The most significant force driving growth today is, of course, AI. We've seen this for the past 2 years, and it's only accelerating. The rollout of autonomous vehicles, for instance, is finally becoming a reality. 10 years ago, more than 10 auto companies predicted that would have autonomous driving ready in just a few years. But it's Tesla that's leading the charge. This year, we're expecting full autonomy to roll out in Austin, with rapid expansion across the country shortly thereafter. The competition? Few have kept pace, and those that did are facing serious delays. In fact, Tesla's lead in full self-driving is just one piece of the broader trend toward automation. Humanoid robots are coming, and they're developing faster than expected. Tesla's expertise in AI, energy storage, and robotics is propelling these developments. It's all part of a larger shift where AI, robotics, and energy storage converge to create groundbreaking opportunities across multiple industries. The humanoid robot market, for instance, could reach a $26 trillion potential, split evenly between home and manufacturing applications. While this seems like a lofty number, consider that we've seen similar exponential growth in the past. A century ago, the advent of the telephone, electricity, and the internal combustion engine boosted global GDP from 0.6% to 3%, a five-fold increase. Today, we have 5 innovation platforms converging, with AI at the center of it all. We believe this could drive a 2 to 2.5-fold increase in global GDP, accelerating economic growth and productivity. In fact, this convergence is already reshaping industries, just like the Industrial Revolution did with manufacturing. Today, robots on factory floors are saving time and money, just like washing machines revolutionized laundry. As AI, energy storage, and robotics continue to converge, we'll see even more industries transformed. And in the coming years, humanoid robots will become a household staple, transforming the way we live and work. As for space exploration, SpaceX is still leading the charge. The company is revolutionizing rocket technology, and the turnaround time for reusable rockets has gone from a year to just a few weeks. Soon, we believe they'll be able to turn these rockets around in a matter of days. This efficiency is essential as satellite launches increase, and the space industry's revenue potential could reach a staggering $132 billion in the coming years. The convergence of AI, robotics, energy storage, and blockchain technology is transforming the global economic landscape, accelerating growth and innovation at an unprecedented pace. It's an exciting time to be investing in the technologies of tomorrow, and I firmly believe that we are just at the beginning of this incredible journey. The future is unfolding before our eyes, and the opportunities are boundless.